Thanks for starting your week with us. Hello and welcome to Business Daily. I'm Lee Ji-yoon in Seoul. Before we get started, let's first take a look at what we have lined up for you this morning. Is Korea's economy losing its puff? We take an in-depth look at lowered growth projections from the Bank of Korea and concerns that the country might be lacking momentum. One traditional village has received a modern-day makeover outfitted with the latest information technology. These stories and more coming right up. Seoul's Finance Minister Choi Kyung-hwan has warned that Korea's economy will be affected substantially if volatility in China's stock market starts spilling over into the real economy. On a debate program in Korea on Sunday, Choi said he's keeping a careful eye on market uncertainties in the neighboring country, but added that negative effects will be limited for now as capital investment from Korea does not reach significant levels. The minister said he's aiming to get the economy back on track by year-end by rolling out a supplementary budget and revising tax laws. Choi emphasized that if such measures are effective, Korea will be able to reach growth of around 3% this year. A new report by the Korea International Trade Association has forecast that a Greek exit from the Eurozone could translate for Korea into a 5.8% fall in exports to Europe. It attributed the drop to the euro currency declining by 13.6% against the Korean won, as the bloc would shed 1 percentage point in economic growth. The EU accounted for 9% of Korea's total exports last year, while Greece only took up 0.2%. Meanwhile, Sunday's Eurozone debt talks extended into the wee hours in Brussels as creditor nations demanded more austerity to regain lost trust. 1 out of 10 jobless people actively seeking employment here in Korea have remained without work for 6 months or longer. That was the finding announced by Statistics Korea Monday, citing figures from May. It reported there were 99,000 such jobless persons, the highest recorded for that month in 11 years. Korea Development Institute, or KDI, a think tank, attributed the trend to a poor job market bogged down by slumping exports and a stubborn economic downturn. So-called comprehensive bank branches are growing in number, and the government is looking into adding insurance firms to the financial service providers present at your neighborhood bank. Here's our Eunice Kim with more.
A bank and a securities firm side by side. This is Korea's comprehensive bank branch number 1, where customers can get assistance not only in their banking affairs, but also market investments. And starting next month, insurance companies will have a presence at the one-stop-shop branches in a trial run of 2 years, in line with the government's push to boost financial competition and convenience for customers. Each financial company will be limited to 3 branches that carry such insurance programs as the government studies whether it will expand it in the second half of 2017. And although it is a pilot project welcomed by financial companies, it's already being met with resistance from the country's insurance powerhouses, who argue the financial group-centric policy could threaten the livelihoods of some 400,000 insurance agents in the long run. They also warn the relaxed barriers could tempt companies to add insurance services into existing financial products. The criticisms have been loud enough to start a counter-campaign at the National Assembly, meant to block the entry of insurance services altogether.
There's a lot to consider, including the impact on insurance firms, how we're going to deal with agents who lose their jobs, and how to develop the sector as a whole.
There are also those who say the government's hand in the private sector is gradually becoming a bit too overbearing. Eunice Kim, Business Daily.
Imagine what it would have been like if modern-day technology existed a century ago. Now, there's a place where you can experience just that here in Korea, with state-of-the-art technology entering a village that keeps traditions alive. Our Lee Ji-young has the story.
The traditional Cheongakdong village that's nestled in the folds of Jirisan Mountain has seen an unexpected transformation into a smart town. When a teacher here writes with a sensory-equipped writing brush and a smartboard, foreign students in remote cities can see the same image on their mobile phones in real time. This is thanks to telecommunications provider KT and its goal to outfit the village with the latest information and communication technologies. Dubbed the Cheongakdong Giga Creative Village, the project is in line with the company's initiative to deliver advanced internet infrastructure to every corner of the nation. Tourists who visit Cheongakdong can also enjoy a more pleasant experience with some 200 Bluetooth-based beacon devices. They're installed throughout the village, providing visitors with information on tourist attractions, accommodation, and local delicacies.
Because it's our first time here, we don't know what's what. But this app explains things like the location and history, so it's quite convenient.
And the use of this technology is not limited to tourists. It can also help locate people.
When my kids go off into the mountains or around the river, I wouldn't know where they are. But the service lets me pinpoint their exact location, so I'm more at ease.
The project is KT's latest initiative to bridge the information gap in rural areas and realize its vision of connectivity nationwide through technology. Lee Ju-young, Business Daily.
The outlook for Korea's economy is looking dimmer, at least according to a number of financial organizations and the country's central bank. And there are fresh concerns that Asia's fourth largest economy might be losing growth momentum. To tell us more about this, our Shin Se-min joins us in the studio today. Hello, Se-min.
Morning to you.
Okay, so you were at the Bank of Korea's announcement, monetary policy announcement last week. What were some of the reactions after the Bank of Korea announced that it's going to lower growth projections for this year?
For many, it was an expected move by the Bank of Korea to lower its growth forecast by 0.3 percentage points to a figure in the 2% range. But for some, it was a surprising move as it goes against the government's rosier outlook of growth above 3% mark. But regardless, as you said, many are voicing concerns that the Korean economy may be losing its steam.
Korea's central bank says the country's economy is expected to grow 2.8% this year, as it estimates second quarter growth will stand at a mere 0.4% from its earlier projection of 1%. The reasoning? The unexpected MERS outbreak and the ongoing drought crisis. The central bank governor said even with the effects of the government's recently proposed supplementary budget, the country's economic growth would still stand in the 2% range. This is not the first downward revision. Earlier, foreign investment bank Nomura shaved its projection to 2.5% from 3%. Both the OECD and major think tank Korea Development Institute slashed it to 3%. But the country's government is still holding its ground, keeping its forecast at over 3% this year and expecting 3.5% next year. But not everyone attributes the slow economy to the spread of MERS and the drought crisis.
The MERS virus is just a minor addition to a larger issue denting the country's economic growth. The projected growth was in the 2% range even before the outbreak was in the picture.
The export-reliant economy has been posting a slide for 6 consecutive months this year, and Korea's consumer prices grew less than 1% for a 7th straight month in June, adding to concerns about deflation. Given the circumstances, experts say the country's fiscal and monetary policies may not be enough to prop up the dire state of the economy. They emphasize the importance of the government's drive for structural reform.
As pointed out by many, the economy is in need of reforms, such as the minimum wage hike. Without such reforms, the economy is likely to stay in the current low growth phase, eventually suppressing consumers' appetite for spending.
We won't know for sure whether this will end up being Korea's cycle of low growth until years pass by. Nevertheless, alternative measures should be introduced now, like public officials' pension reforms, things that take time to change.
The country's recent decision to raise the minimum wage has also been considered another way to restructure the economic environment, as improving the living conditions for low-income workers would eventually help give the faltering domestic economy a boost.
You know, Simon, this is not the first time that experts have called for structural reforms for Korea's long-term growth, I guess. But then in your report, even the experts say that it's really hard to tell whether Korea is entering a low growth period.
You're right. They say only time will tell. But the problem is, by the time we realize it may be a little too late. So experts are saying that it is important to get the structural reforms going. Within the next decade or two, the country will definitely be faced with a labor shortage. So rebuilding the structure of the economy is something that should begin now, and especially considering that long or mid to long-term reforms take up about 5 or even 10 years of time.
Okay, well, any other reasons as to why the analysts are calling for such reforms?
On top of the existing economic conditions now, experts are saying that the global economy's growth engine has shifted from manufacturing and trade to service and domestic consumption. So it's a little more crucial for Korea, considering that Korea is heavily reliant on exports. So in order to help sustain the country's economic recovery, it is crucial that the country shift its gear from export-driven economy to domestic-driven economy.
Okay. All right, so I guess we need more reforms to ensure that the country doesn't fall into prolonged growth, low growth period. Thank you so much for coming in today, Taemin.
My pleasure.
All right, that wraps it up for today's edition of Business Daily. Thank you so much for staying with us throughout our program, and we'll be back tomorrow at the same time, same place. Until then, goodbye.